Now say hello and good morning and even Happy New Year to Sridhar Sivaram. Good morning.
Good morning and Happy New Year.
Why are you
Happy
looking
New
different?
Year.
Sorry?
Why are you looking different?
I'm different. This is a new year, so a different look.
Will it be a different look for the market also this year?
I hope not. Market's been doing very
Yeah.
well. So the same look is good enough.
So you expect the kind of returns what we've seen, how much of that will continue? How much of 2023 returns are likely to roll over to 2024?
If I had known all that, I wouldn't be sitting here. I'll be sitting in some, luxurious island.
You've been
And
going
you're not
there,
going to
no?
say island, you have to say a
Jungle.
resort, a safari.
Jungle.
But you go there, right?
So yeah,
So, yeah, obviously
I'll
you know that's
permanently
why
be
you go there.
I'll permanently be there. Jokes apart, I think India will do well. I think the stars are aligned. If I look at emerging markets and see how they have performed, within that only 2 countries have given 8% plus dollar returns in the last 10 years, which is India and Taiwan. The rest all have been a basket case. I have been saying that emerging market as an asset class is struggling because they haven't given any returns for say 10 years, 15 years, 20 years. And every year we see the same thing, one country disappointing versus the other, and India stood out there. I don't see that changing, and I think barring say, in the short term you can say the market's overdone, a little bit of correction, but over a medium to long term I would say that India will continue to give the return. So if you say 10 years or 20-year returns, they're in the between 12 to 14% range. I don't see any reason why that should change over the next 10 to 20 years.
Are there clusters of overvaluation in the markets?
Of course.
PSUs, small caps, what's happening in the SME space, or even the IPO flurry that we've seen?
Yeah. So we remain quite bullish on PSUs.
Sure.
In fact, especially the banks. So we did a quick number crunching to figure out what has happened. These stocks have gone up so much. How have the earnings grown? Surprisingly, the earnings in the last 3 years have outpaced the stock returns. So actually, they've got derated.
Earnings have outpaced the stock return.
Yeah.
Okay.
So actually, they've got derated because the stocks haven't kept pace with the earnings. And if I look at the earnings outlook from here on, also, I think they will do north of say 30%.
You're talking about which category of PSU? Because it's metals.
PSBs.
No,
PSBs.
I'm talking of the banks. Yeah.
Okay.
Within the PSUs in general, there are various pockets.
Yeah.
Okay, so some pockets like defense and all have become very expensive. There are other pockets like say the oil marketing companies. If you take, they look extremely cheap, but they are cheap for a reason.
Yeah.
So if you want to, fast forward and assume that some of these will change, then they are interesting bets. So there are various pockets which have different valuations. We remain bullish on the entire pack selectively. Banks surely, and others selectively where we think that earnings look good, opportunity is decent, and valuation comfort is far better than other pockets as you
Sure.
mentioned in the market.
So other than PSBs, where do you find in this market there's value on the table?
So I would say in some pharma companies where some cases we are seeing some corporate action where the companies are divesting there. Some businesses, some companies are merging with the others. Domestic business in some cases are undervalued. So we do see some opportunity there. Large cap financials look very good. They haven't done anything in the last year. Maybe for the right reason because liability costs were going up. So market was smart enough early enough to understand that liability costs will continue to move up. We think that that looks quite interesting. So that's the other pocket, I would say. Otherwise, it is mostly stock specific in most other places.
And what other stocks you like? Since it's stock specific, I'll be simple here.
Unfortunately, I can't speak on stocks, but you.
You like gold though, and the mantra for 2024 is
Well, I've been-
diversify your portfolio, right?
I've been speaking about gold for a very long time,
Yeah.
and my point is simple that if you take gold returns, because gold is a hedge against the currency, so people underestimate the currency aspect of gold. Our currency has depreciated 4-5% every year. You take the 20-year returns, gold and Sensex have given same returns, 13%. And you take the last 5 years, also the same returns. So, there'll be pockets where the markets will outperform gold or gold outperforms market. My point is that you have options like SGB, which is a financial gold, which you can invest. It gives you a tax-free return, plus it gives you 2.5% interest. If you add up all of that, it actually gives you a return better than the markets. I'm not suggesting you don't invest in markets. I'm just saying 5 to 10%, depending on your appetite, you should invest in gold. And I always say that Indian woman has been the best fund manager. We do so much analysis and we struggle to beat the returns that the Indian woman makes by buying gold. That's the reality of life.
Yeah, and I don't know what the Indian woman is doing when it comes to buying household items with inflation, etc.
But you're a man, you're buying gold, ऐसा नहीं है.
Huh?
You're a man, you're buying gold, ऐसा नहीं है.
But I am buying gold only in
On
the
the
last,
behest of-
say, 7, 8 years or 10 years. Indian women is buying gold for 50 years.
Yeah.
Fair point, fair point.
But consumption, some updates coming in, the slowdown seems to be a
Yeah.
bit evident within that space. Is that a
Yeah,
concern?
so I've traveled a lot in the last 2 months, been to at least 4 or 5 different states in the remote places, and I can say that it's clearly a K-shaped recovery. There is stress in rural areas, and hopefully this, as we come closer to elections, we see an increased spending across the board, and maybe that brings a cheer and the consumption starts to boom there. But I would say that we currently are in that K-shaped recovery. Anything which is urban related, and we are seeing the numbers also, they're all doing well. Discretionary consumption, if it is urban, be it hotels, airlines, airports, you just go, you know what is happening there.
Yeah.
But as you move into the hinterland, things are a bit slower, I would say. So that's how I would categorize how things are right now, and hopefully this changes in 6 months.
There are 3 big assumptions for 2024. One,
Yes.
FIs will come and they will come back and they will be forced to buy into Indian stocks. They will keep on bidding the prices higher. Assumption number 2, continuity of the government, and that template, what has worked so far, will continue to roll after May 2024 also. And the third assumption is that earnings will continue to compound anywhere between 12 to 14% or 12 to 15% depending on the estimate. Which assumption out of the 3 assumptions, these are popular assumptions, consensus assumptions, could be challenged?
One,
FIs will
That
not come
FIs
back?
will not come back?
No, so when I speak to all my friends who run FI money, one, as I said, I think emerging market as an asset class is getting challenged. If it hasn't given returns for 20 years, I don't see any reason why this will change in the next 4-5 years. People are already questioning this asset class. One of the simple reasons why I've been talking about that this asset class is getting challenged is the fact that this is not a homogeneous asset class. It has countries which have current account surplus and countries which have current account deficit. Countries with 30,000 per capita to 2,000 per capita, and commodity exporting countries to commodity importing countries. So the plus of one is minus of the other. Net for 20 years we've not given any returns. Within that, India has done well. So various emerging market fund managers are now trying different types of emerging markets, say emerging market ex-China or Asia ex-China. But I don't think a lot of pension funds or large funds will want to invest in some of these type of funds. Some of my friends who run India dedicated FI money are saying that they are not getting incremental flows. They are getting very trickles, not to the extent that they would have expected. And most fund managers are overweight India.
Financials.
Massively overweight India because China has done nothing. So if you take last 3 years, I'm saying MSCI dollar return, China is down 20%, India is up 10%, CAGR. So in 3 years, India has outperformed by 30% CAGR over China. India's weight has gone from something like 10% to 18% in MSCI. So yeah, on that 18%, most funds are already overweight. So I don't think FIIs will make such a massive difference to the market. I think that domestic flows will continue to surprise. FIIs will at best may not sell, but keep in mind that China has become so cheap that if it turns from here, there'll be a lot of people.
Yeah.
I mean, actually the positioning is really bad for China right now. I don't know much about China, but I just know that the positioning is very bad, right? Consensus underweight, India is a consensus overweight, and they haven't been cheaper. And some of my friends explained to me stories in China. I said, wow, I mean, these stories are available at 3p, 4p, 50%
and it's
cash.
pretty much back to normal. I mean, I know people who travel to China.
So I
It's
think the
business
only
as
problem
usual.
with China has been that they haven't had earnings growth.
Perception.
Perception is one, but they haven't. They also had earnings challenge. Whereas India has surprised on earnings. So when you mentioned that what can be challenged, the third one also can be challenged to some extent, but our earnings trajectory has held very well.
If China comes back, we'll stay with this. Then this entire excitement which is centered around manufacturing, China plus one, EMS. China is a ready supply chain. India is building a supply chain. If China comes back, exports will come back. The supply chains will be rolling. So then what happens to China plus one Indian manufacturing themes?
So China, it is not like China comes back. China is already open. But because of the geopolitical issues that China is having with the US, India is in a sweet spot. That's what I mentioned earlier, that the stars are aligned for India. So whether China comes back or not, the China plus one story for India remains. Actually, it has become plus one now, not necessarily China, because there is also some European plus one that is happening on the chemical side. So I think that plus one story remains. We remain very constructive on the entire manufacturing, EMS, chemicals, because there may be some cyclical issues in a lot of these, but on a structural basis, we think this is a very bullish space. Just take Apple as an example. There are no listed plays for Apple manufacturing, but Apple wants to go from 10 billion exports to 100 billion in the next 2 to 3 years. And we know from speaking to supply chain people who are manufacturing, say some of the components, that they are the orders are like 10 times their current capacity. And they're scared. I mean, I put up this 10 times capacity, what happens if Apple doesn't come? So I think the opportunity space is huge. We will see manufacturing as the next big theme for India. Like what happened to auto ancillary? 20 years back, we were just an assembly unit in India. And today 97% or 95% is manufactured within India. Same, I mean, the skeptics say that, oh, this is just an assembly unit, not more than 10%. But that is changing. Maybe in the next 3 years, we go to 30% manufactured or value added in India. That's huge. And if one Apple does, the entire ecosystem gets built, it becomes a huge industry.
So before Avan and Asha take over, I have a follow-up question, which is that, I completely, anybody who's watching the show is perhaps convinced that, what Suzuki's entry did to India, Apple's entry will do to the entire electronic manufacturing space. Manish Bhai has been talking about this from last 6-8 months now. So if that thought has to be extended in terms of an actionable process,
Yes.
what is the best way to participate in the EMS scheme? There are 4-5 players who are listed.
See, I will
just
not
buy
give
a
names,
basket,
but
just buy the basket.
Yeah, but I'm just saying this basket will do well.
Okay, even though it is
because
expensive.
it is not just mobile manufacturing, it is electronics. So you and me will know that in everything that we touch today, the electronics component has gone up 10 times. Even you take a EV, has so much of electronic component. All of that has to be manufactured.
My coffee cup has an electronic sensor now. It checks the temperature.
Wow.
Everything has an
everything is
electronic
become
component. So it is not, so people confuse this by thinking that this is only a mobile or something like that. From a medical device to say an electronic device or some manufacturing automation that has happened, everything needs an electronic component. So EMS actually takes into account all of this. So they are basically suppliers for all of this. So it could be anything. Even a chemicals company needs an electronic component that also gets manufactured. So EMS as a space, whether it is plus one or not, is going to boom anyway because the electronic component in our daily lives is significantly going up. Now, having said that, these stocks have rallied a lot. So it is not as if they have not rallied. Their earnings will also grow. May not be structural, may not be like every quarter it grows. So you will see surprises here. Those are the opportunities to buy. That's how I would say that you have to look at it from a 3 to 4 year perspective. And if I look at which industry can do well, I think this industry stands out. They're not very high margin. So I will want to caveat, they're not very high margin business. They are
12-13% margin.
No, they'll be single digit.
Dixon and others have even single digit.
So most of them will be single digit, but their
Shirma is
ROEs will be good because asset turns are good. So it's a different way of looking at it. We are always obsessed with high EBITDA margin companies, but I think markets recognize that this is how it is.
Sure. But tell me, if the FII money weren't to come back to India, while we've managed to do it all by ourselves thanks to the DII flows
Yeah.
all through 23,
Yeah.
does the theory of bet on large caps also get challenged? Because one was betting on the FII money finding its way into large caps.
Yeah, so I'm not saying that FIs will not come. I think given that emerging market is a large asset class, even though it's not still getting money, the other thing that is happening is that within emerging markets, given that fund managers are unable to outperform the emerging market benchmark, money is shifting from active to passive. So when you get active to passive shift, then people are buying, that money just goes into the index, which is large cap heavy. So it's also a question of how. So if you look at what has happened to passives in emerging markets, the chart is going like this, and the actives are falling. So the overall pie is still remaining roughly the same, but passives are gaining, which augurs well for large cap. In general, I think even if you're active, the mid and small cap, I mean, I don't think FIs come in the small cap anyway. Even the mid caps, they look quite expensive. So I think the opportunity set
The
is
writing's
shrinking.
on the wall.
Yeah, exactly. I don't know when it happens, but I think if I were to take a bet, I think large caps should do well. Large caps did well last year, barring the top,
Selectively, yeah.
top 7, 8.
Yeah.
So if you take, the Nifty top 10 performers, all of them gave north of 30% returns. It's just that they weren't the top 7, 8 market cap
Names.
large caps.
Yeah.
So
And there's been so much activity in the primary markets. Aisha spoke about IPOs as
Yes.
well. Just your thoughts, because at the same time, within that space, it has been a bit of a wake-up call when it comes to profitability metrics, etc. for a lot of these.
yeah, so this reminds me of late 21 when we had this frenzy
Exuberance.
of IPOs, and then 22 was a wake-up call, and people then started to change their business models, which is good. That's happening. This sort of reminds me again of the same frenzy that we are seeing. So whenever you see frenzy like this, you have to step back and assess the situation. We don't have any FOMO, we don't have any benchmark, so maybe we are in a better position than many of my other fund manager friends who have to manage daily NAVs and other things. So it's easy for me to say that you step away, but that's the reality. We
Okay,
can just
one
step
does the
away.
Google, we pretty much get the top holdings of Enam securities. Public information. I'm not getting into stock specific, just hear me out. The core of the portfolio is a mix of pharma, good old names like MRF, LMW, Wellspun, Zodiac. How much of your portfolio construct, given what the market levels are, given where the earning cycle is, could it change as if you
So
go
actually,
forward?
this gives you only where you have more than 1%
Yeah.
holding, and so it shows up all the mid caps. But given the size, it's predominantly large cap.
Okay.
So it's this doesn't reflect the true, holdings of the group.
My point is here, what I'm trying to understand is that investors, you can always find opportunities and you can always find pockets where you think markets are running ahead of themselves, which means you need to book out profits
Yeah.
or you need to ride the earning cycle. How much of the portfolio construct for the house which you represent could change given that the dynamics in the market are changing? For example, IT is slowing down. For example, chemical has gone through a big churn. For example, pharma is making a comeback. Are there large portfolio changes which could be on the anvil looking at either valuations or the earning picture?
A lot of the changes already happened. Like we would have definitely added more to financials, large cap financials.
Yeah,
I
yeah,
mean, PSU banks we've been adding over the last 2-3 years. I don't think that has changed much. We've in fact added more, in the last 6 months because that's a pocket where I see very strong earnings growth. So I think it's a constant process, but some of the strategic long-term mid caps that we own, I don't think we keep churning that. I mean, that's not the style. So that remains.
Are there any large changes which you think you could be doing considering again valuations or where the sector is headed? I mean, a sector sometimes is called as a sunrise sector, a sector sometimes becomes a sunset sector. That's the nature of the sector, that's the nature of the earnings trajectory. Are there any large changes which
See, we have differences of opinion within the firm. Like
Okay.
I've been a bear on the IT sector for a very long time. And my point is that AI is disrupting Indian IT sector because 30% of the software industry's employees are in the 1 to 3 year experience base.
Yeah.
And if you see I just track one number for every result, which is what has been your employee addition
That's coming
or
down.
reduction. It is coming down. So it is telling me, because coding has become so easy, experts tell me that what 10 people used to do, now one person can do the same job much more efficiently in 1/10 the time. So I think this entire bottom of the IT pack, which is the 1 to 3 year experience, is slowly getting reduced. There is attrition anyway. So as the attrition is happening, you're not replacing with newer people. So this is both an opportunity and a threat. Companies who can disrupt themselves will see this as an opportunity. I think the threat comes first and the opportunity comes later. So I remain bearish, but not everybody in the firm has the same view.
Fair point.
They're still cautiously optimistic, quote unquote. But anyway, great speaking with you. Thank you so
Thanks
much
a
for
lot. Thanks
taking
for
the time
inviting
out
me.
and
Yeah, thank
joining
you.
us today.